Welcome to Investors Insights, where today's topic is shutdown over. Now what? So a lot going on over the weekend. We got good news. It looks like the government shutdown is ending. And so we definitely want to talk about that. I'm going to cover a concerning spike in layoffs, and Ty is going to talk about how the government shutdown, when it ends, what that means for the market. But first, Trey, we got good news yesterday, government shutdown. Talk about the key takeaways and what it means going further.
Yeah, thanks, Bobby. Yeah, so surprising news. I think over the weekend we didn't expect to be talking about this topic come Monday, but happy we are. And yet, so as things stand now, there appears to be an agreement to get 60 votes in the Senate to end the government shutdown. What does that mean? That means that they have what's called a minibus bill for a full year appropriation on parts of the government. So like the Department of Agriculture, which includes food stamps, those parts are funded through September 30th. That's the fiscal year for the federal government. The remaining parts, the majority of the budget, will be funded through January 30th of next year. So we'll be running this. We'll probably run all this back up again on January 30th. But in the near term, eight Democratic senators joined with the Republican Party to reopen the government and kind of extend things as they are and start debate on passing that through. So leading into this shutdown and throughout, we've been talking about how historically government shutdowns don't impact the market. But I think all of us noticed last week that it's starting to have a material impact. And from an economic standpoint, we're starting to see a material impact from travel and those kind of situations. Consumer spending on travel and leisure were starting to fall off as people weren't able to travel. Thanksgiving holiday, the largest travel week of the year. So maybe that kind of push. But I want to show this chart. It's not going to be talked about, but it's a good indicator to us of things like government shutdowns and debt ceilings and how those impact the stock market and the economy. This is the Treasury General Account. And this is something we watch closely, especially around debt ceilings, because that's when it has the most impact. But for government shutdown, it turned out to have a large indication of where it was hitting the economy. So what happens is in normal times, the federal government taxes and borrows. So they tax from wage earners and they borrow from savers to then pay out benefits. And so it's there's an in between where you're taking from one part of the economy, giving to the other. So it's a net wash in general. But what happens here is the general account. This is the savings account for the U.S. government. And during the shutdown, borrowing and taxing continued. And so you see here that the savings account for the government went from 819 billion all the way up to 953 billion. So during this short window of just over a month, 134 billion came out of the economy in tax and borrowing, but because the government shut down, none of it went back out into the economy. So we had a net loss to economic activity of $134 billion. Now, had this been a shorter shutdown, as you can see in that chart earlier, nothing really happens. But as it extends and as payrolls are stopped and as people aren't being paid, that tax continues to build as people are still paying taxes, even though they're not getting paid. And so we started to see that negative impact on the economy and on the market as liquidity really dried up. And so it's very good to see this extended. We expect that it'll pass the Senate soon, the new bill to extend, and should hit the House by Wednesday. And the president should sign it by the end of the week. So hopefully we'll have this. That Treasury General account should start to fall. That's something we're going to watch closely. As does that fall? Do we see that money that came out of the economy go back into the economy? It very much needs to and should.
Yeah, thanks, Trey. That's a great summary on the impact of the government shutdown. So, and pivoting for a minute here. So last week I talked about the 90-day delinquency rate on credit cards spiking, and I mentioned that a surge in layoffs would make the delinquency rate more worrisome. Well, last week, consulting firm Challenger Gray and Christmas issued a bleak report. And as you can see in this chart, the report highlighted that U.S. companies' job cut announcements nearly tripled to 153,000 in October from 54,000 seen in September, with companies citing cost cutting and then also artificial intelligence as a reason why. But this report revealed that last month marked the worst October for layoffs in more than 20 years and was the highest total for a single month of layoffs in the fourth quarter since 2008. So while we have been waiting on Labor Department data due to the government shutdown, we have been able to continue analyzing data through private companies and consulting firms like Challenger. So we'll continue to watch the labor market even closer now with some weakness showing up. And remember, the labor market helps tell a story on consumer spending. Consumer spending impacts corporate earnings, and corporate earnings impact stock prices. So it's important that we pay close attention to job hirings and layoffs. And so, Ty, going back to the government shutdown ending, talk about how the government shutdown impacts the market long term and how the market reacts when it gets worked out.
I think it's important to go back to the beginning and remember why the government was shut down. This is the longest shutdown on record. The reason was, as you see in this chart, they were fighting over ACA subsidies. And so ACA is the Affordable Care Act, and it's for, kind of healthcare assistance. And so the cost of extending the ACA that both parties could agree on was about $30 billion for 1 year. When you look at that in comparison to the amount of wages that federal employees would lose if the shutdown lasted 1 year, again, nobody ever expected that, but $252 billion. So at what point does the cost kind of outweigh the benefit of fighting over this and having the government shut down? And I think we were beginning to feel that pressure, and that kind of led to this deal. Also, there were some elections in some states that probably influenced things and helped get the deal done. I think both parties were waiting to see, who would have the upper hand. And as we move on with the news of the government shutdown kind of ending here, I did want to look at, what happens to the market after a government shutdown ends. We talked about it's usually not a huge factor, and trade just hit on it. During a government shutdown, market performance isn't a huge deal. This one was longer and probably did affect things a little bit more. But typically after a government shutdown ends, what does performance look like? And I have a chart here of some notable government shutdowns and when they ended, 1 week later, 2 weeks later, a month, going all the way out to a year. And you can see the results are pretty positive. If you look out a year later, 88% of the time the market is up, an average return of a little bit over 15%. I'm sure we would all, sign up for that. So overall, again, this doesn't have to be the case. As you see in 2018, it was negative. That's the one outlier. But it's important to look back at history. But, as we always say, it doesn't mean that that's going to lead to future results. But something to take a look at as we're wrapping up the government shutdown here.
Yeah, and that's great news. I mean, the great news is that during the shutdown, the longest shutdown in history, all the negative news around the shutdown, the good news is corporate earnings season was very, very strong. And so you had the tug of war between the negative of the shutdown plus the very positive of the earnings report. So a lot to cover as always. If you have any questions on anything we've discussed, call us, email us. We love to hear from you. We hope everyone has a great week. Thanks for watching.